Hello, good morning. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. With me is my colleague Kartik Malhotra. As usual, Kartik, good morning.
Good morning, Shweta. How are you doing?
I'm very well. How are you?
I'm very well, and so are the markets this morning.
Markets are very well as well.
Yeah,
opening in the green.
Opening in the green, I think nothing to complain about the mood of the markets overall, as we have seen sustained rally over the last many days now. We are seeing a 0.1, 0.2, 0.3% increase in markets on a daily basis. That trend continues today as well. When markets opened at about 9:30 a.m., we took a stock check. You were looking at Sensex, Nifty, Nifty Bank, Nifty IT, all in the green. Nifty IT, of course, exceeding expectations at up about 0.6% or so, and all three other broader market indices up in the green by about 0.2%. Nifty 50 holding squarely above the 19,300 mark, touching 19,350 levels. Sensex continues to be well above 65,000 levels. Of course, we've come down squarely from the peaks that the market had seen of the Nifty at that time, you know, in kissing distance of 20,000 points and Sensex around 67,000 points. We don't see those numbers on the boards right now, but there has been a gradual daily increase in the mood in the markets, and that's showing on the screens as well.
All right, let's get our guest Chirag Patel, who's the co-head of product and strategies at WhiteOak Capital, joining us on the show to weigh in on what's affecting the markets this morning. Chirag, good morning. Markets opening in the green once again. What exactly is weighing in?
So basically, if you see yesterday, the US Dow closed on a green zone, and currently the sentiment is also positive mostly, and that is what is also reflecting in the numbers, right? And India is also doing well in terms of all macro parameters. All companies' result has been good. The margins are good. So that is what is reflecting into the Sensex. However, day to day, it is very difficult to comment on such movement. But yeah, fairly India is doing fairly well as compared to the rest of the world. That is what is being reflected on everyday scenarios mostly.
So I think three big headline events this week. One, of course, we saw yesterday, Chirag, with Reliance AGM and big announcements coming there, which of course we will come to subsequently in our discussion on the show and with you and Shweta. In addition to that, we are hoping that there is some sort of a conclusion to the Adani Hindenburg saga today. SEBI is expected to submit its report in Supreme Court, and that matter is up for hearing today. And then, of course, 31st August
Adani Group
is
stocks, in fact, under pressure due to that hearing.
Well, they opened in the green when I checked markets last. And the third headline event, Chirag, that I think we will all be waiting for are Q1 growth numbers expected on the 31st of August. Now, Reliance, of course, has played out well when it comes not specifically to the Reliance stock, but overall to the mood of the market. Adani, we don't know where it's going to head from today. And then, of course, the big headline event of growth figures coming out on the 31st of August. How do you expect markets to read all these movements?
So basically, a stock market is nothing but a present value of the future cash flows. So whenever any company give an optimistic kind of statements, the market reacts to it, and it also depends on the credibility of the companies who are declaring those kind of estimates and assumption, and that drives the stock prices also, because the market start reflecting those future cash flow in its present value. So that is how it functions, right? And the growth numbers that we are going to get. So if you see in current quarter also, the result has been fairly good because the WPI was down, the margin has improved. So revenue was struggling slightly, but the margin has been higher because the WPI was lower during the last quarter, right? So which is actually the cost to the manufacturer. So margin has improved in last quarter, and if you see the GST collection was fairly rising month on month. So we expect good GDP number. And if you see from the India perspective, right, India is doing fairly well as compared to the global scenarios, right? So for example, if you see from 2011 to 2020, the world was different. It was a zero interest era. It started with QE1, QE2, Operation Twist, and the world is running on stimulus, right, with zero interest or almost close to zero kind of interest. But India was not having the same scenario. We were running high interest rate during the same period. But post-COVID, the world has changed, right? The interest rate has been up. There is inflationary pressure everywhere, right? And they have seen the inflation that which they have never seen in their life, right? And our interest rate and our inflation is lower than the pre-COVID level. right? So nothing has changed for us, but actually things has improved for us. So actually the stock market is nothing but it's a present value of its future cash flow. So it has two components. It's the growth of the future cash flow plus the discounting rate. You are at which rate you are discounting those cash flows, right? So in India, the growth has improved, the inflation is fairly well placed, and the interest rate is lower as compared to the pre-COVID era, and that is why the Indian market is outperforming, right? So that's the scene, and
Okay.
wherever there is a capability, the capital will chase eventually, right? So that we are looking across the market.
How do you read the FDI inflows dwindling? That's a story that we were talking about yesterday and it was in the papers as well. FDI inflows in India have now been stuck in a slow lane. We've seen, in fact, a year-on-year decline of about 34%. What is triggering reduction in capital chasing India in terms of direct investments? I'm not talking about stock markets, but in general, investment mood in India seems to have dampened post-COVID in the last 1 year alone.
So basically, if you see the FDI flows are, if you see on a cumulative basis, they have been increasing in India. Sometimes they will be higher and sometimes they will be lower. But from where we are comparing it, if we are comparing from the high base, you will see a lower FDI flows. But when you compare on aggregate basis over a long-term period, we are fairly increasing the rates. But yeah, you may be right that, in recent past, it has been lower than what we have witnessed a year back, right? So that's the scenario. So it is a basically an anchoring bias. So from where you are starting. And
Okay,
if you
and
see, yeah,
yeah, so
you can.
specifically for investors, if you were to take the story of India back to investors and you represent the AMC business at WhiteOak, what do you think should be the long-term strategy of investors? Active investing, passive investing, direct stocks, mutual funds, what seems to be the best formula for Indians to want to invest in markets today?
So basically, so India is a country where there is a ample scope of active investing because we are not a market which is a matured market like United States or other developed market. We are still a developing market, and all the market which has gone through this transition phase from developing to developed market, they have created alpha. So there is a scope for active management. However, those who want a low cost product can also opt for a passive index investing kind of product. There is no harm in doing that also. So it is a combination of active and passive management, but we believe that there is an ample scope of active management and there are significant opportunities in small and mid cap space. And another thing is, rather than betting on any sector or any theme, I think India is a market which is fairly diversified, right? If you, for example, if you consider a Taiwanese market, it is you recall a semiconductor industry. If you are considering a Bangladesh market, you recall a textile market. But if you think of an Indian market, it is not skewed by any sector, right? It is actually a conglomeration of various sectors, and there can be a great company within a average sector, or there can be a bad company in a bullish sector also. So I think if you identify great companies who is having a competitive edge, who can maintain its margin in adverse condition also and grow faster in during the good times, I think a better stock picking, those companies who are having great businesses, who are having
Okay.
scalabilities and great execution are the great companies to invest in. And I think if you don't understand equities, so just to tell you that if you can't write 5 page on a stock, you should invest into mutual funds, right? So that is what is.
Okay. Interesting.